Hey everyone, if you're looking to generate passive income by investing in dividend stocks, then you've clicked on the right video. I'm going to bring you one dividend stock where if you buy 75 shares, you can generate $500 in annual passive income. So in this video, I'll not only highlight what that stock is, but I'll share with you why I think it's a good investment and why the $500 per year is only the beginning, that it's likely to increase from there. So you'll start with $500 per year, but over the next 5, 10, 20, 30 years, that number is likely to grow much, much larger. So let's get right into it. Let's see what the stock is and why I think it's a good dividend stock to buy.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so the dividend stock that I'm talking about in this video is McDonald's, Mickey D's, the Golden Arches. So now let's go through why I like the stock so much and why I think it makes a good investment for passive income investors. But before we get into the details of that, let's do some of the math for the dividend. All right, so here's the latest dividend increase. The company declared a 10% increase in the quarterly cash dividend of $1.67 per share. So that's quarterly, that's 4 times per year. So we go to our spreadsheet here, $1.67 quarterly dividend, annualized, that's $6.68. So to get $500 in annual passive income, you need 74.85 shares. I've rounded that up to 75. And considering that each share price as of this recording was $295.85, your total purchase would be $22,144 to generate this $500 in annual passive income. But like I said, that's only the beginning. I think over time, this dividend annual income is likely to increase. It's likely to increase meaningfully, in fact. So let me share with you why I think that's the case. Starting with the company's sales, digital sales to be precise. So digital system-wide sales in their 6 top markets were nearly $9 billion for the quarter, representing over 40% of their system-wide sales. This number was almost negligible, almost zero 5 years ago. And why is this so important? Well, for a number of reasons. Let's go through why each one, right? For one, when you make an order on an app, that's less work that a cashier or a drive-through worker has to do. They don't have to be there taking your order. So that means for each restaurant location, that's a lower labor expense, making each restaurant more profitable. Okay? Remember also, McDonald's runs on a franchise model. So it gets franchisees to invest in opening new locations. Well, if you're a potential franchisee and now you look at the location and you look at the potential labor expense is now much lower than it was, let's say in 2015, 2016, you're now a lot more interested in opening up a McDonald's location because now you're looking at it like, wait a minute, when I looked at this opportunity 5, 6 years ago, it was showing that I needed to hire and maintain 15, 16 employees for the location. Now I only need 12, maybe 11. And so that's a lower labor expense and that's less pressure, less work for me to hire, maintain. And, McDonald's employees, there's a high turnover rate. You have to constantly keep hiring new people. And that's lower stress, lower management time, all overall better for the expense and desirability of opening a McDonald's location. That's for one. For two, it's just a better customer value proposition. It's a better user experience. Think about when you go through a drive-through trying to yell out and scream your order into the microphone, and then the drive-through agent telling your order back to you, and they may get something wrong and you have to repeat back your order and back and forth and back and forth, and then you open your bag when you get home and you realize they got something wrong anyway, right? So when you're ordering through an app, it's an easier functioning process. There's less likelihood for mistakes because you're clicking on the item that you want and there isn't that barrier between communication, misunderstanding. and the user experience is better. And so people are going to likely use McDonald's, purchase McDonald's more often. Okay. So not only is it better user experience, it's also lower costs. That's a win-win situation if I've ever seen one. And that's great news for investors. And coupled with this digital expansion for McDonald's, it's allowed them to expand their food delivery. So now McDonald's is not only for drive-through or pickup, you can also order McDonald's for delivery. That increases the geographic reach of each location, again making each location more lucrative, again increasing interest from franchisees to open another McDonald's location. So all of this are recent innovations from McDonald's, which is already a very profitable business, which I'll show you in a little bit. And that's only going to increase profitability longer term, which is going to leave more cash flow, which means that dividend per share could increase even more over time. Let me show you the profitability. McDonald's has demonstrated economies in scale. Economies in scale is one of the most desirable characteristics you can find in an investment. In the example I have created here, sales grow from $100 in year 1 to $115.76 in year 4, while net income more than doubles from $4.50 to $9.47 in year 4. This company demonstrates economies in scale. As its revenue grows, its profits grow by a larger magnitude. Not every company can achieve this kind of effective growth. Here's how it works. This is a typical categorization of an income statement of a publicly traded company. Cost of goods sold is what's called a variable expense. That means cost of goods sold is connected to sales. Other expenses like interest, general and admin, and depreciation are not connected to sales. You can see here depreciation stays the same at 25 whether sales increase or not. The same is true for interest expense. It stays the same whether sales grows or not. You can understand your interest payments do not increase when your sales increase. Overall, businesses typically have a mixture of fixed expenses that are unrelated to sales and variable expenses that are. When sales increase, the business leverages those fixed expenses, as we see in this example, and profits grow by a larger magnitude than the increase in sales. That being said, you can see McDonald's operating profit margin increase from around 30% in 2014 up to 46% in 2023, or the latest trailing 12-month update, strongly demonstrating economies in scale. That's true also for its cash flow from operations to sales at 37.28%. These numbers are important because this is money that McDonald's can use to pay dividends. I already mentioned the company runs on a franchisee business model. So that means the cash flow that it generates, it doesn't need to use to open new locations. That capital investment is made by franchisees, allowing McDonald's to use the cash flow the business generates to pay dividends. And finally, McDonald's stock is trading at near its highest valuations according to, let's go out a little bit longer term, 3 years. If we're looking at the forward price to earnings ratio of 23.63, it's about on the higher end of this valuation it has traded for, but I think it deserves the premium because the business is in so much better shape than it was 2, 3, 4 years ago because of these innovations. These are long-lasting, innovative advances that are going to pay off for investors long term. Structurally, each McDonald's location is now more profitable than it was before they made these digital enhancements. And so going forward, I already showed you how profitable they were in the previous 10 years. Going forward, they should be even more profitable because now the company comes with these enhancements that it didn't have for the previous decade. So for all those reasons, I think McDonald's is an excellent choice for passive income investors looking to generate annual income of $500 per year that's likely to actually increase over time. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.